This is East Asia Tonight.
Good evening, I'm Oteli Edwards. Tonight's top stories from East Asia. The US president and his Iranian counterpart sign an interim deal to end the war and reopen the Strait of Hormuz, a move welcomed by China and Japan. A 60-day push is now underway to lock in a final agreement. Fresh from the G7 summit, Beijing once again in the spotlight as EU leaders gather in Brussels to debate tougher trade measures amid concerns over Chinese exports and reliance on Asia's top economy. Meantime, Beijing insists its export controls on Japan are designed to curb Tokyo's militarization. The comments come as Japan pushes for G7 backing for critical minerals stockpile partnership. And relief across Asian trading floors. AI-optimism coupled with a peace deal to end the war on Iran send benchmark indices in Japan and South Korea to fresh record highs. Also ahead, from a viral blind box toy to a global entertainment franchise. Chinese company Mart, creator of the 2D monster Labubu, is looking to turn its hit characters into lasting franchises. Plus, FIFA World Cup excitement hitting fever pitch in South Korea after their opening match win over Czechia. And businesses are cashing in on the surge of national pride. East Asian nations have welcomed the signing of an agreement between the US and Iran aimed at ending their war. The conflict started in late February and has disrupted shipments of oil and gas, much of it bound for Asia, triggering a global surge in energy prices. Now, the agreement was supposed to be formally signed in Geneva tomorrow, but in a surprise move after attending the G7 summit in France, US President Donald Trump signed the document in the Palace of Versailles, a highly symbolic venue which also saw the signing of the 1919 treaty that ended World War I. Now, Iran's president was also shown on state TV endorsing the deal in Tehran. The agreement stops the fighting and starts a 60-day negotiation period to hash out a final peace agreement that Mr. Trump insists will prevent Iran from getting a nuclear weapon.
中方希望美伊双方都能以理性务实态度对待第二阶段谈判，相向而行，共同努力，争取下阶段谈判取得积极成果。
The effective closure of the Strait of Hormuz has forced Asia's biggest energy importers into contingency mode. China relied on stockpiles and cut oil imports, while Japan and South Korea tapped reserves and scrambled to secure alternative supplies.
今後ですね、今回の覚書が着実に実施をされて、ホルムズ海峡における自由で安全な航行が速やかに再開するとともに、イランの核問題等につき最終的な合意が一日も早く実現することを強く期待しているところです。
Now, President Trump has described the deal between the US and Iran as performance-based, with Tehran benefiting only if it complies with its commitments. So what exactly is in that agreement? Well, the memorandum calls for an end to all conflicts linked to the war, including the fighting in Lebanon. Tehran has warned that any continued Israeli military operations in Lebanon would amount to a violation of the agreement and would prompt a response. Now, the deal also requires Iran not to develop, acquire, or possess a nuclear weapon. And in return, the US would begin lifting restrictions on Iran's economy, including ending its blockade within 30 days and unfreezing Iranian assets. And at the same time, the agreement outlines a plan worth $300 billion for Iran's reconstruction and economic development, though Washington says it's not required to contribute. Now, it also seeks to safeguard one of the world's most important shipping routes. It guarantees safe passage through the Strait of Hormuz with transit fees waived for 2 months. Iran says it retains sovereignty over the waterway and reserves the right to begin charging vessels once that period expires. The agreement, however, contains no restrictions on Iran's ballistic missiles, something Israeli Prime Minister Benjamin Netanyahu insisted would be part of the deal. There is also no commitment to release political prisoners or rein in Iran's proxy forces. Now, as we've mentioned, both sides enter a 60-day negotiating phase aimed at reaching a final agreement. The timeline, however, can be extended if Washington and Tehran both agree that more time is needed. And for more of our coverage on the US-Iran deal, do log on to our website, cna.asia, and also on our mobile app. European Union leaders are set to discuss trade and economic security measures related to China as they begin a two-day summit in Brussels. Now, the talks come a day after the G7 summit wrapped up in France, where Beijing was also a key topic of discussion. Now, the bloc is expected to address efforts to counter unfair trade and competition practices as the EU continues to examine concerns of a surge in Chinese exports, posing to European industries and jobs as well. Now, the bloc's trade deficit with Beijing continues to grow, reaching more than $400 billion last year. It has pledged to reduce dependence on China and strengthen protections against subsidized imports. Ukraine and the Middle East situation also expected to feature prominently. Ukrainian President Volodymyr Zelensky is set to take part in talks focused on Kyiv's bid to join the EU, as well as ongoing support from the bloc. Brussels, meantime, is also preparing a new sanctions package aimed at ramping up pressure on Russia. Right, for more, we have CNA senior correspondent Han Yu-Guan joining us from Shanghai, and also William Denslow covering this story for CNA in Brussels. Well, first to you, Will. Well, we know that the European leaders, they have a whole range of issues to discuss with China once again, which is very high on the agenda. Do we know what exactly is on the table and how united is the bloc on taking a tougher stance towards Beijing?
Well, on the table is absolutely right. This is an issue that will be discussed over dinner between European leaders a little later. Antonio Costa, the president of the European Council, in his invitation letter to European leaders, said that over this dinner they'll be discussing what he describes as global macroeconomic imbalances. Read how to address the issue with China, a trade relationship that many EU officials simply describe as unsustainable and complain against what they see as unfair trade practices conducted by Beijing. This is an opportunity for member states to see whether they're on the same page on whether these trade imbalances, perceived imbalances, need to be addressed and how to address them. They'll be looking at existing tools in the toolkit or whether new trade instruments are required. It's then expected that member states will then present their findings and their directive to the European Commission to take further.
All right, Yu-Guan, just to bring you into the conversation now, from China's perspective, how are they reading Europe's hardening of its position?
Well, Beijing, it appears, is trying not to frame this as an inevitable trade war. At today's Ministry of Commerce briefing, the spokesperson said that China-EU trade communication is proceeding, he says, smoothly. He pointed to talks on June 9 between China's Vice Minister of Commerce and the European Commission's Trade Director General, saying those talks laid the groundwork for ministerial consultations. And that same briefing highlighted a quote from the EU side that a trade war is not the objective of its China policy. But, you know, that stance that China is trading unfairly is already having a chilling effect on the ground. For example, Chinese steel exporters are already feeling the pain. Shanghai-based steel sourcing executive told me that automotive steel exports to the EU customers have already dropped sharply since the start of the year. Meanwhile, his company CEO also warned that in an internal memo that the steel business is being hit on several fronts all at once: EU quota changes, anti-dumping measures, and also EU's carbon border levy. And what's more, EU's new steel regime starts next month, in just 2 weeks really. From July, the tariff-free quota for steel falls to about half of 2024 levels, while the tariff on anything above the quota doubles from 25 to 50%. You can only imagine what that does to Chinese steel exports to the EU. Meanwhile, on the government level, China is pushing back on language it's describing as a country being out of line when it comes to its growing exports or its controls on various critical resources. We're seeing that message across ministries. The foreign ministry today, for example, pushed back against G7 language on critical minerals and rare earths, saying that China's export controls are in line with international practice, and accuses the G7 of forming exclusive cliques. Now, so China sees Europe becoming more anti-free trade, more protectionist, but also believes that dialogue with Europe is still possible. Meanwhile, some Chinese watchers believe that Europe is divided and still does not want a full confrontation. And therefore, Beijing can leverage on that space. Oteli?
And Yuguan, do we know what options, does Beijing have exactly to prevent ties from deteriorating further?
Well, Beijing's first option is to keep talks alive. That is why it is highlighting the China-EU trade and investment consultation mechanism. The message is that disputes over EVs, steel, chemicals, or the trade imbalance should be handled through negotiation, not unilateral restrictions. Second, China can offer more market openings. The Ministry of Commerce today pointed to an export to China event in Berlin involving more than 120 Chinese and German business representatives. That is kind of China's way of saying Europe can sell more into the Chinese market if they can. Now, third, Beijing can offer targeted compromises on specific sectors, export rebates, procurement access, or investment conditions. But it also has a stick. If the EU moves ahead with new restrictions, especially unilaterally, China can retaliate through investigations, export controls, or targeted pressure on European sectors that either need Chinese raw materials or the Chinese market. We've seen that happening before. Beijing can retaliate in very specific ways, targeting products such as French cognac or Spanish pork. And it can potentially do the same for German autos. Oteli?
Hey, thanks so much for unpacking EU summit for us. CNA senior correspondent Han Yuguan from Shanghai. And earlier we're talking to William Denslow covering for CNA in Brussels. Right, on that note, we are going to go for a short break now, but coming up next on East Asia Tonight. South Korea launches a new state-run company to manage its investment pledge to the United States. Hello again. Good to have your company on East Asia tonight. Well, you're just in time for business news with Roland Lim. And in the spotlight, Japanese and South Korean stocks apparently hitting new milestones. So, Roland, tell us what's driving investor confidence.
Well, there's been a flurry of positive trading news, expectations of lower energy prices, Bank of Japan's gradual path towards normalization for rates as well. Now, index benchmarks in Japan and South Korea set fresh records on optimism surrounding AI and a signaled peace deal to end the war on Iran. The Nikkei 225 extended its rally from the previous session to cross the 71,000 level for the very first time. It gained as much as 1.9% before retreating from its peak, but still ended the day at a fresh high. South Korea's Kospi also broke above the 9,000 level for the first time in its history. The record set less than a month after it breached the 8,000 point mark. Chip giant and index heavyweight Samsung Electronics, SK Hynix notched record closes as well. But the country's financial watchdog has issued a consumer warning after seeing extreme volatility in single stock leverage exchange-traded funds, or ETFs. The products linked to Samsung and SK Hynix were introduced in South Korea late last month and are capable of amplifying the daily movements of company shares. The Financial Supervisory Service found that the market values of the ETFs have doubled in about 2 weeks since their debut, and their daily turnover rate is far higher than comparable products. Market Watchdog has cautioned retail investors to be aware of risks and to make careful investment decisions. Meantime, Greater China markets ended the day mixed, with the Shenzhen component the only one in the green. Major stock gauges in Hong Kong have been tracking losses. Many are made up of internet and consumer firms that have been weighed down by worries about sluggish consumer spending in China. Most have little exposure to the AI-driven rallies as well. Our sentiment has dragged the MSCI China index close to 20% down from a recent high, indicating that it is near a bear market. Hang Seng China Enterprises Index also performing poorly, with losses mirrored by the Hang Seng Tech Index. Tencent and Alibaba have been among the biggest factors weighing down on the MSCI China. The Chinese internet giants are facing fierce competition despite investing heavily in artificial intelligence. The same factors are also playing out for the Hang Seng China Index. Weaknesses in China Construction Bank or CCB shares adding to pressure on the gauge. In contrast, tech-focused Star 50 Index has been surging. Now it tracks the 50 largest firms listed on Shanghai Exchange's Science and Tech Innovation Board. The index rose as much as 5%, but pared gains to end at a record close. Well, Taiwan's central bank leaving its key benchmark interest rate unchanged at 2%. Its governor last week said that while prices in the island have risen, they remain relatively stable as compared to other economies. Other monetary authorities in Asia have started to hike rates to curb inflation risks linked to the war on Iran. Taiwan's decision aligns with the U.S. Federal Reserve's move to leave interest rates unchanged. Now, the island often tracks the U.S. Federal Reserve's stance to avoid big cross-border capital flows due to an interest rate gap. The Hong Kong Monetary Authority also following suit to leave its benchmark rate unchanged at 4%, in line with market expectations. The HKMA moves in lockstep with the Fed due to a mechanism that pegs the US dollar to the Hong Kong dollar to maintain currency stability. Now, the Fed opted to hold interest rates steady at a range of 3.5% to 3.75%, but leaned more hawkish after Kevin Walsh's first policy meeting in charge of the central bank. Krishna Guha of Evercore ISI talked us through the inflationary pressures facing the U.S. economy due to the Iran war and the AI boom.
So I think it's been the case for a while that there's been growing concern on the committee about inflation running once again above 3% likely all year, and meaningfully above 3%, even on the core PCE measure that excludes the direct effects of higher energy and food prices. And so that's left many officials really on a sort of borderline of whether they think it's going to be necessary to hike or not this year. What was interesting really is just the number who felt they're now just a little bit on the side of that line that says it's probably going to be appropriate to hike. Could be a little stale. It may not fully incorporate the implications of the US-Iran deal and the lower path for oil. But both the committee's overall assessment and Walsh's press conference make it clear that that's by no means the only issue in terms of the inflation and rates outlook. It's probably still premature to think that the Fed is locking in for hikes at this juncture. But the Fed's analysis, our own work, Walsh's discussion, such as it was, of the inflation dynamic, I think underlines that there's a lot more going on here than just the oil shock from the US-Iran war. The US, of course, is still just going only just past the peak impact of tariffs on inflation. That should fall away in the coming months, but that's not guaranteed. And we have a further wave of AI cost spillover pressures into core consumer inflation that seems to only be building at this point. But it's a complex picture, and the underlying inflation rate, which we do think is sub 2.5% and tracking lower, still hasn't decisively come through in that cleaner manner. It does feel now that we're racing the clock, that we need the next few inflation prints to provide some reassurance, both at the aggregate level, but also in terms of those individual stories. Are tariffs rolling off? Is that pass-through from oil into core inflation looking like it's going to peak at lower levels and before then roll off? What's going on with AI capex cost spillovers? And are we seeing more clear evidence in the data of this downshift in the underlying inflation trajectory? If that doesn't come through, it feels to me at least like Walsh has boxed himself in, perhaps quite deliberately, to a position where if that doesn't happen, he's going to have to hike by September.
And here are other business stories on our radar. Oil prices tumbling close to pre-war levels after the US and Iran confirmed they have signed a deal to end the war in the Middle East. The development raises hopes of a lasting peace after months of fighting disrupted energy markets and pushed oil prices sharply higher. Analysts are hoping the resumption of normal oil flows could help ease inflationary pressures around the world. Japan's banking lobby is warning that Japanese banks could suspend services such as ATMs and online banking if advanced AI models become a serious threat to the financial system. The chair of the Japan Bankers Association say lenders are concerned about more sophisticated cyber attacks that go beyond what they had anticipated. The warning comes after Anthropic said that its Mythos AI model had uncovered thousands of software vulnerabilities and warned that the fallout from its spread could be severe. And on that note, JP Morgan Chase has reportedly stopped staff in Hong Kong from accessing Anthropic's Claude AI models. According to the Financial Times, the move was prompted by wording in Anthropic's licensing terms with the bank. Goldman Sachs reportedly made a similar move in April, removing Claude from its list of approved tools for Hong Kong-based bankers. The restriction comes amid rising US-China tensions over AI technology, data security, and access to advanced computing tools. South Korea has launched a new state-run company to manage the $350 billion investment pledge to the US. The Korea-US Strategic Investment Corp, or KUIC, is tasked with turning that commitment into projects. The new company is based in Sejong and was created under a special law passed by the National Assembly in March. It'll operate for 20 years, with the government putting in about $1.3 billion to establish it. Seoul and Washington agreed on the package last year in return for lower tariffs. South Korean Finance Minister Koo Yoon-chol said that the alliance is moving beyond security and trade into strategic industries and global supply chains. Seoul says investments will be judged on commercial viability and strategic value, with a focus on sectors including AI, energy, and shipbuilding. A former Deputy Trade Minister Park Jong-won has been named KUIC's head. He says the company will support long-term growth in strategic industries and deepen bilateral industrial cooperation. And that'll do it for business at this hour. Well,
thanks for the business update, Roland. Well, we are going to go for another break now, but coming up next on East Asia Tonight, China warning Taiwan that relying on the US to pursue independence would only lead to a dead end, after President William Lai voiced hope that the pending US arms sale will be approved soon. Plus, Beijing also hitting back at Tokyo's remarks at the G7 summit, saying its export controls targeting Japan is aimed at stopping its militarization. You're watching East Asia Tonight, and here are the headlines we're following. The US president and his Iranian counterpart sign an interim deal to end their conflict and reopen the Strait of Hormuz, a move welcomed by China and Japan. A 60-day push is underway to lock in a final agreement. A central topic at the G7 summit, Beijing is once again in the spotlight as EU leaders gather in Brussels. They will be debating tougher trade measures, concerns over Chinese exports, and reliance on Asia's top economy. Now, Beijing defends its export controls on Japan, saying that they are designed to curb Tokyo's militarization. Japan is seeking G7 backing for a critical mineral stockpile partnership. Well, as mentioned, China hitting back at Japan's proposal for critical minerals involving the world's most advanced economies. Japanese Prime Minister Sanae Takaichi put forward the idea of it during the G7 summit in France. She warned export restrictions on rare earths and other goods could severely impact the supply chains of bloc members and other like-minded nations.
G7 として重要鉱物の共同備蓄で連携していく、そのことも今回のサミットで私から提案し、賛同を得て成果文書に盛り込むことができました。
我们敦促七国集团切实遵守市场经济原则和国际经贸规则，停止以小圈子的规则来破坏国际经贸秩序。
At the same time, China has increasingly criticized Japan's alleged growing militarization amid Tokyo's recent policy shifts to boost security capabilities. A Japanese defense minister, Shinjiro Koizumi, says that security is among the administration's top priorities after committing to historic spending increases. Now, some analysts view the changes as a departure from aspects of Japan's post-war pacifist posture, while the government maintains its policies remain defensive and in line with the Constitution. Now, for more perspective on this, we are joined now by Jacob Kirkgaard. He's non-resident senior fellow at the Peterson Institute for International Economics, and he is joining us all the way from Brussels. Well, thanks, Jacob, for joining us on East Asia tonight. Well, let's just start with Beijing's response. China linking these critical mineral curbs to Japan's militarization. So, Jacob, what do you make of Beijing's shifting narrative here from a trade dispute to a military accusation?
Well, I think it basically can be traced back to the fact that the Japanese government achieved very significant success at the G7. If you read the G7 communique on critical minerals, they basically endorse the Japanese proposal for a joint development, potentially of joint stockpiles, recycling, diversification away from a single non-named, but obviously China, dominant supplier. So this is very clearly what the Japanese government will have wanted, what other EU certainly, but also now the Trump administration in Canada supporting this. What China has done is then, of course, say, well, the only reason that Japan wants this is because they want to rearm. But I think that is a misrepresentation of the facts, because what Japan has done is in response to repeated, going all the way back to 2010, Chinese export controls, indeed export blockades at some point of critical mineral exports to China. So if you want to put it this way, it's a defensive measure by the Japanese and the G7 governments.
So it is a significant effort then on Ms. Takaichi's part to build this coordinated approach to critical minerals among advanced economies?
Yes, I would say that Japan is clearly the leader on this issue. They are the ones who have been, if you like, in the past, as I mentioned, going back all the way to 2010, suffered from the consequences of sudden politically dictated Chinese critical mineral export restrictions. So therefore, they have the most experience in this. We saw it obviously last year following the trade war between China and the United States. The same thing happened. And as part of those restrictions put in place by the Chinese, Europe was also affected. So you could say that the rest of the G7 has very quickly caught up to the Japanese experiences and therefore are now willing to support proposals put forward by the Japanese government.
And Jacob, can you just give us a reality check here? Because in the past, you have argued that Europe's fear of dependence on China for critical minerals is overblown. Is that still the case? Why and why not?
What I think we need to see, and certainly analysts like myself needs to factor in the now very clearly and very revealed willingness of the Chinese government to repeatedly weaponize these critical mineral dependencies and the Chinese dominance of these supplies. As I mentioned, we've seen it in the past with regards to Japan. Now we have seen it repeatedly again, targeting Japan. But we've certainly also seen it targeting the rest of the world. And therefore, we need to, people like myself need to reassess and say that, yes, this is a weaponizable trade element. And for that reason, policy measures like the ones proposed now and adopted, agreed by the G7, I think needs to be implemented by not just Japan, but indeed the rest of the world, and certainly including the European Union.
Well, if we moving on to economic security, so let's say if the G7 moves forward on that front, and let's say that Washington, will probably be driving the bus on that one. But given also the ongoing trade tensions globally, Jacob, do you think Europe and Japan can truly rely on this U.S.-anchored framework, or do you think that they need to build their own independent strategy?
I think that, yes, when you're dealing with President Trump, who basically likes to put tariffs on everybody, not just his geopolitical rivals in China, but clearly also allied nations like the EU and Japan, that raises suspicions that maybe he's not the kind of reliable partner that he's looking for, or that the other G7 members will be looking for. So I think what Japan, Europe, Canada, and other free trade-minded nation needs to do is to work together, but perhaps do so in a voluntary manner, and one that is not reliant on, for instance, the fiscal capacity or other actions of the US. But obviously, joint actions will work much better if you have the largest economy in the United States part of such an effort. But it certainly, in my opinion, would be very risky to make it dependent on the continued, policy cohesion and decisiveness of President Trump, because we know he tends to change his mind on many things very often.
Now, moving on to the EU summit. Well, you are joining us from Brussels, where EU leaders, they are gathering and fresh off from the G7. We know that there's going to be tough talk, but in terms of real practical momentum within the EU to actually, go tough on Beijing, I mean, how far can they push on that front?
Well, I think we are seeing I dare say, historical shift in the German position on this issue, where traditionally Germany, because China was always viewed as a very important export market for Germany, it has always been hesitant, indeed blocking measures proposed by other EU members, noticeably France, to take more aggressive trade measures against Chinese overcapacity, export overflowing into the EU markets. Well, there is a shift now, I think, in the German position, as the German industry also feels the full brunt of China's improved and often subsidized export companies across the full range of the technological spectrum. So I think you will kickstart a debate with new concrete initiatives to be announced, not necessarily in the next couple of days, but over the next weeks and months by the European Commission. And then we will see whether or not, in fact, the European Commission can propose new trade tools for the EU, tools that both WTO compliant, but also can target China, but not allied and FTA partners of the EU like Japan, like many countries in Southeast Asia, but as I said, solely on China. And of course, at the same time, be applicable in a meaningful scale and rapidly. These are a tough policy design order, so we will see. But I do believe that we are seeing a gradual shift in the EU position towards a more, if you like, muscular approach to China's trade distortions.
Well, some great insights there. Thank you so much for helping us connect the dots between the markets and geopolitics. Jacob Kierkegaard, non-resident senior fellow at the Peterson Institute for International Economics, joining us from Brussels. Coming up next, the company behind blind box toy Labubu looks to transform the viral sensation and its roster of hit characters into an enduring global franchise. Well, you can hear it there. Excitement hitting fever pitch in South Korea after an opening match victory against Czechia in the FIFA World Cup. And it looks like businesses are reaping the benefits of that enthusiasm. China has warned Taiwan that relying on the U.S. to pursue independence would only lead to a dead end after President William Lai voiced hope that a pending U.S. arms sale worth some $14 billion will be approved soon.
台湾是中国领土不可分割的一部分，台湾的前途命运只能由包括台湾同胞在内的14亿多中国人民共同决定。赖清德四处鼓噪台独分裂言论，只会一再暴露其内心的惶恐不安。以美谋独，以武谋独，注定是死路一条。
The Taiwanese leader says that U.S. security commitments remain unchanged and hopes the arms sale wins approval. The U.S. says the deal has not been decided yet. Now, the toothy monster Labubu made Pop Mart a global phenomenon. Now the Chinese company is looking to give its characters a longer life beyond the toy shelf. From theme parks to films and exhibitions, Pop Mart is building a world around its characters, even as it looks for its next breakout hit. Well, CNA's Rebecca Mateo reports from Beijing.
What do you do when a toy becomes a global hit? For Pop Mart, the answer is a theme park. Welcome to Popland, where fans can step into the worlds of their favorite characters.
因为还是比较喜欢拿布布还有那个星星这两个 IP， 然后也想看看这边不是还有那个乐园限定款吗？
会再来，因为好多地方我看都没有开嘛。
对，就是那个拉布布，主要是我玩那个还唱歌呢。
Located in Beijing's Chaoyang Park and spanning roughly 6 football fields, Popland reopened in April after more than a year of upgrades. The revamped theme park now features new rides and shows. And there's more to the story. Pop Mart tells me that fenced-off area across the lake is set to be transformed into new permanent themed zones inspired by other popular Pop Mart characters like Skull Panda and Twinkle Twinkle. Construction is due to start next year. It's all part of Pop Mart's push beyond toys and collectibles as the company builds new experiences around its characters. But beyond the attractions lies a bigger question. Can Pop Mart produce another hit on the scale of Labubu? Pop Mart's revenue nearly tripled last year to $5.4 billion, but about 40% of it came from The Monsters, the series which includes Labubu. That has fueled investor concerns over the company's reliance on its breakout star. Pop Mart shares fell by nearly 23% in March.
从财务数据上来讲，当然拉布布非常亮眼，但实际上我们其他的 IP 的营收的规模也非常的受消费者的欢迎。先对 IP 产业来讲，它是一个慢生意。所有历史上大家能看到的，比如说迪士尼也好、漫威也好、哈利波特也好，所有的 IP 是一定需要时间的沉淀。
The company says the answer isn't simply creating more characters. Instead, it's focused on extending the life of existing ones while continuing to develop new IPs.
比如说，最近可能大家关注的拉布已经开始要做拉布的大电影。当然，我们在已有 IP 开发的基础上，也在全球范围内去吸纳更多有全球影响力的新鲜的 IP 加入我们的体系。 那我们可以理解成，我们其实是一个 IP 的平台，我们在广泛的，吸引全球优秀的艺术家入驻，希望把他们的艺术的表达凝结成 IP 的产品，能够推向全球的消费市场。
That strategy is on display at Beijing's 798 Art District. Here, Pop Mart is celebrating 20 years of Molly with a special exhibition.
Molly 刚出来的时候，我特意为他做了一个他专有的小画室。
Inspired by a little girl he met at a charity fundraiser, artist Kenny Wong created Molly, one of Pop Mart's longest-running characters. Over the years, he has continually reinvented her through new collections.
当初我们的粉丝，我们之间的关系是，Molly 是提供一种给他疗愈的一种关系，但是慢慢的粉丝社会的环境也不一样，他们对于这种情绪的需求都不一样。
For Pop Mart, Molly's longevity is proof that a successful character can outlast changing trends. It's the kind of staying power the company hopes more of its characters can achieve. Analysts say the push comes as competition intensifies.
What differentiates the Pop Mart, I think, is the ownership of its artist IPs. Rather than compare with other players, such as the Minnesota, they are relying on more relying on the licensed content. But the Pop Mart has a stronger control over its IP portfolio. So that will allow the company to transform the IP collection products into a more life choice for the consumers.
Ms. Liu says consumers today are increasingly seeking emotional connection, self-expression, and a sense of belonging. The challenge for Pop Mart is creating characters that can stand the test of time and win fans within and far beyond China. Rebecca Mateo, CNN, Beijing.
World Cup fever is growing across South Korea's capital, Seoul, as its national team prepares to face Mexico tomorrow. Now, businesses say enthusiasm has picked up since South Korea's opening victory over Czechia. And our CNA senior correspondent, Lim Yun-suk, brings us this report.
At this World Cup fan zone in Seoul's Gangnam district, visitors can test their shooting skills and take part in football-themed games. The pop-up was created to give fans a place to gather and enjoy World Cup activities during the tournament. For many of them, the morning kickoffs haven't dampened their enthusiasm.
원래는 지금 오전이어가지고 사실 별로 인기가 없을 줄 알았는데 그래도 학교에서나 이런 데서도 많이 중계해주고 광화문에서도 중계를 많이 하니까 그 생각보다 좀 많은 것 같아요.
Businesses say South Korea's opening win has given the tournament an extra boost. In this story in Seoul's trendy Songsu district, supporters are browsing national team merchandise and shopping for jerseys. It's run by Mushinsa, one of South Korea's largest fashion platforms. Mushinsa says searches for the term South Korea jersey on its app jumped by nearly 5 times following the team's opening victory, while sales of all football jerseys on the platform rose more than 30% from a year earlier. Liu Jieha is shopping for a jersey to wear at Gwanghwamun for Friday's match against Mexico.
원래 유니폼 입고 막 응원할 정도로 관심 있진 않았는데 이번 월드컵은 좀 재밌고 유니폼 디자인도 좀 이뻐가지고 입으면서 마음으로 응원하려고. 사람도 많고 다 같이 으쌰으쌰하는 분위기를 느껴보고 싶어가지고 가보고 싶습니다.
This chicken barbecue chain prides itself on having the longest queues in Seoul, and it says the World Cup has already brought an unexpected rush of customers. It opened its doors early last Friday, showing the game live on a giant screen when South Korea played its first match against Czechia.
이제 여름이다 보니까 낮에는 덥잖아요. 뜨겁기도 하고 저희가 그래서 손님들이 더운 맥주를 마시고 좀 땀을 뻘뻘 흘리면서 경기를 보셔야 되는 게 그게 좀 마음에 걸렸었는데 경기가 또 너무 재밌다 보니까 그런 것들도 좀 시원하게 날릴 수 있지 않았나.
The restaurant says it had extra food, drinks, and staff on hand, and that interest among diners grew after South Korea's first match.
경기가 이기자마자 예약이 그냥 순식간에 마감이 되었거든요. 이제 19일 경기도 그렇고 25일도 그렇고 매장에서 하는 경기들이 그냥 순식간에 다 마감이 되었어요. 이거 보러 올 수 있냐? 어떻게 예약을 할 수 있냐? 어떻게 가면 되냐? 이런 것들 질문이 엄청나게 많이 들어왔거든요. 그걸 보고 좀 많이 느끼게 됐습니다.
Other restaurants also reported higher sales during South Korea's first match, by as much as 4 times compared to usual, with many stores opening earlier to meet demand. From retailers to restaurants, businesses say the team's winning start has sparked more interest in the World Cup than many had expected. South Korea's next test comes against Mexico on Friday. This Gwanghwamun Square is expected to be one of the main gathering points for fans, and all eyes will be on whether that momentum continues. Im Yan-suk, CNA, Seoul.
And that wraps up this Thursday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. You can also find us on our socials, Facebook and YouTube. For coverage from the FIFA World Cup 2026, keep with Singapore's national media network, MediaCorp, and to subscribe to stream the games live on MeWatch. And if you are watching in Singapore, do stay with us because we have the latest match highlights from the World Cup.